Welcome to Dual Edge Research. Different markets, one research philosophy. We believe successful investing isn't about predicting the future. It's about consistently identifying higher probability opportunities through objective, data-driven research. That philosophy drives everything that we do. Whether we're analyzing thousands of stocks or hundreds of thousands of commodity spread combinations, the process is always the same. Filter, rank, select, execute, repeat. That research powers two specialized newsletters. The Bull Strangle newsletter applies the research process to stocks and options, identifying high-quality companies for systematic option income. The Smart Spreads newsletter applies the same discipline methodology to seasonal commodity future spreads. Through research into seasonality, historical performance, forward curves, and trade selection, our goal is simple. Identify higher probability opportunities backed by objective historical data. Today we're focusing on smart spreads. Let's begin. Have you ever found what looked like the perfect seasonal commodity spread only to have the trade disappoint? One of the biggest misconceptions in seasonal trading is that once you've identified a historically profitable pattern, the exact timing of your entry doesn't matter. Our research suggests otherwise. Think of every seasonal opportunity like a wave. It begins to build, gains momentum, reaches a point where the historical edge is strongest, and then gradually fades. Enter too early, and you may spend weeks waiting for the move to develop. Enter too late, and much of the opportunity may already be gone. The goal isn't simply to participate in a seasonal trend, it's to participate during the portion of that trend where history has produced the strongest statistical advantage. This has become a core principle of the Smart Spreads research process. Rather than asking only whether a trade has been historically profitable, we also ask, when has that edge been strongest? Which entry weeks have developed the best combination of profitability, consistency, and risk? Natural gas sell spreads provide a great example. Across more than 5,200 historical trades, the overall statistics are impressive, with an average profit of roughly $1,370 and a 77% win rate. At first glance, those numbers suggest that almost any entry during the seasonal window should perform well. But when we examined the data week by week, a completely different picture emerged. Several early entry weeks produced only modest returns. Later weeks generated disappointing returns and higher downside risk. Yet beginning around week 32, average profits surged over $3,000 per trade, win rates climbed over 80%, and large losses remained relatively low. The market didn't change, the trade direction didn't change, only the timing of the entry changed. That single decision dramatically altered the historical performance of the exact same seasonal opportunity. This illustrates why we evaluate individual entry weeks instead of creating an entire seasonal window as equally attractive. Seasonality identifies the opportunity. Timing helps determine whether that opportunity is being pursued during its historically strongest period. Small improvements in timing may seem insignificant on a single trade, but across hundreds of trades, those improvements can compound into a meaningful statistical edge. And this is only one dimension of timing. In the next video, we'll explore another factor that many commodity spread traders overlook completely. We'll examine why the front month of the spread can dramatically influence historical performance. You'll see how two trades entered during the same week in the same market with the same direction and number of legs can produce remarkably different historical results simply because they differ with different front month contracts. Thanks for watching. If you enjoyed this video, visit bullstrangle.com for additional research, education, and the Smart Spreads newsletter. For a deeper dive into commodity spread trading, be sure to check out my book, Trading Commodity Spreads, which is available on Amazon. We'll see you in the next video.